Hi, I'm Steve Weil with RMS Accounting. This is the first in a series of short videos on the 2017 Tax Reform Framework. Yesterday, the Trump administration, along with select members of Congress, released a unified framework for tax reform. The document, though it includes more detail than past releases, is by no means a complete detailed understanding of what lies ahead. Of course, this is also subject to many changes that will come when the document gets in front of the House Ways and Means Committee and the Senate Finance Committee. So get ready, a roller coaster ride is on its way. Those of us that have been around the block over the years with numerous tax changes and tax reform plans know the devil is in the details. For individuals, the plan eliminates personal exemptions and increases the standard deduction to $24,000 for married couples and $12,000 for single people. Since no mention is made of head of households, we can only assume that they will be considered single for the purposes of the standard deduction. While current law also provides additions to the standard deduction for those that are elderly, 65 or older, and those that are blind, this seems to be absent from the proposal as it currently stands. Whether these changes make you better off or not will depend on a number of factors. If you are a married couple with no dependents and took a standard deduction, your new standard deduction of $24,000 would exceed the amount in the current law of $20,800 by $3,200. And $20,800 is made up of the standard deduction amount of $12,700 plus two personal exemptions of $4,050 each. So you may be paying tax on less of your income. But if the same married couple has two children, they go from a current standard deduction plus four exemptions totaling $28,900 to the proposed standard deduction of $24,000 and lose $4,900 in tax-free income. The framework also states it will significantly increase the child tax credit, but doesn't specify the increased amount. Additionally, what income levels the phase-out will be at. And of course, the phase-out is scheduled to remain, and anytime there's a phase-out, things just aren't simple. This is only the beginning of what's covered in the President's 9-page plan, and we'll be covering more in the coming days. But for now, it's important to understand that while we can guess at what the results will be, and they won't be the same for all taxpayers, interesting times lie ahead. This is Steve Weil for RMS Accounting,